Hi, welcome back to CMG Oral Space trading channel, right? This is another special episode on backtesting and forward testing. I bet you a lot have heard about backtesting, yet a few have understanding or have actually been doing this the proper way. And then a few have just heard about forward testing, right? A lot do not know about what is forward testing, right? So even some do not know about back testing, not to talk of for testing. So if you are here, then you are at the right place. CMG is here to throw more light on the differences or what is actually done step by step in back testing and forward testing. Now, to clear the air, back testing and forward testing has nothing to do with the creation of the strategy. Before you do back testing or forward testing, it means you already know or you have a trading strategy. Now, if you do not have, then look in this video description for a link. I've actually done a precise or concise video on how to develop a robust trading strategy, right? In this video description, and then you will be good to go. Now, let's look at the differences. In fact, one is a subset of the other, right? And for testing is actually dependent on back testing. So it means that if you do not have a back testing or a strategy for that matter, you can't be doing for testing. And it's one of the things that is lacking among traders, even those so-called guru traders and then the amateurs, right? We just jump into trading, just assuming any trading strategy or anything, hunting strategy from here and there without actually testing them, right? So before you actually start trading your mentor's strategy or not, you have to backtest it yourself. And that's the main reason for, in fact, one of the main purposes or mission of this channel, to help you develop or do analysis on your own. That is my main aim or my mission. One of the important things that I wish for every trader, right? So you learn from your mentor, and then afterwards you do things on your own. You try to do things on your own with the help of your mentors. Without notwithstanding, now what is backtesting and forward testing? Right now, these are critical processes in the development and evaluation of trading strategies. They help traders and investors understand how a strategy might perform. A strategy might perform based on historical data. And then this historical data basically talks about backtesting. And then in real-time market conditions, that is what for testing, right? So the two are in this sentence. Now let's look at backtesting. Now, backtesting involves testing a trading strategy on historical data to evaluate its potential effectiveness. It helps determine how a strategy would have performed in the past. So it means that whatever testing you are going to do on this strategy that you have, supposed strategy that you have, right, is on historical data. So the historical data means markets, in fact, things that I've done, market, let's say today is Tuesday, right? So doing a back testing, you don't do analysis on today's market, but you do things that has happened, right? Market that has played out. So if you watch the how to develop the robust trading strategy, I've spoken a lot there, so I wouldn't talk much here, right? So you can go as far as back as 1970, right? 1990, right? 2020, right? 2010, 2012, right? 2013. So you see all these dates are backdated, right? So you have a strategy, and then you use this data to do your testing, right? So you enter trades on what market that has already played out, right? You test it, and then you check in the forward condition, as in the days ahead, right? Or the data ahead, and then check if you had entered the trade on that day, would you have been profitable or not, right? So that is the idea of what back testing, right? So you are entering trades on market that has already played out. That is back testing. Good. So, and here you are not what using real money, right? You are just testing if you had this trading strategy in, let's say, 2010, entering this position or trade, would you have been profitable or not? That is the whole thing about backtesting. Yes. So if you want to understand more about building a strategy, just watch the video in this video description. So that is it. Now, let's look at some key steps in actually doing this or developing what is backtesting. Now, one is data collection. Now, data collection, gather historical market condition, including price, volume, and other relevant indicators, right? And then let's move to the second one. Now, define strategy. Now, clearly outline the trading rules and conditions of the strategy. So these two lines are actually what we address fully in the video that I just talked about in the what building your trading strategy. So everything is outlined there. So you check which market that you are going to trade, either stock, bonds, forex, crypto. You see, you decide there, and then you come, and then in two, you write something we call entry rules and exit rules. In fact, your purpose for having that strategy, and then everything is done there. Good. Now, three is where we actually begin the whole thing. Now, apply the strategy to historical data to to simulate traits, right? So now we have your strategy developed. We have it in what? In position, right? So now apply this strategy. You have your strategy already in place, right? So now apply these things, assuming with the condition that you have set in this strategy. Enter trades in what? Backdated what? Market environment. That is what it means. And then see if you'll be profitable or not. Now, as you enter the trades, right, you give it time for the trade to run out, right? So move to 4. Now, performing metrics. Now, analyze the results using performance metrics such as 1, return on investment. We have looked at this, right? So it's like risk to return ratio, right? Risk to reward ratio, I should say. That is it. And then we look at what the Sharpe ratio, right? It helps investors know how their investment is working. Example, the typical example is you trading, you a retailer, right? Trading. If on this position, your risk to reward ratio, how profitable you were, and all that. So that is it. Now, the third was maximum drawdown. We have looked at this already, and we have win and loss ratio. That's your risk to reward ratio. You understand? So this is under what? Backtesting. You are checking these things, right? Because when you enter a trade, you have your lot size, your SL, your TP, the time that you entered, the time that you exit, right? Yes. And what time did you enter? In fact, everything about that. And then what was your return, right? The position. Did you run into a profit or loss? And then you look at it once again. Is there a mistake that you did? Any other mistakes, things that you need to what? Rectify? That is backtesting. So you'll be adjusting this strategy until you are more convinced and have faith in your trading strategy. And everything, this all is done in your backtesting. Right. Now, we look at point 5. Now, refinement. Refinement, but that's the adjustment. So adjust the strategy based on the results, and then retest as needed, right? So sometimes as you entered, you look at the time that you entered. If you entered too early, impulsively, right? Or you delayed too much, did you have any problem with fear or hope? You understand? Yes. Were you too aggressive? What was your emotions? So everything here is under refinement. So you refine and then find a way to change, make some massaging or editing to that strategy because you are back testing. You are not live yet. You haven't gone live yet. So that's why you have the liberty to make some changes, right? That is after the trade has run. You understand me? After the trade has run. So as the trade is running, you'll be jotting down, writing things, amendment that you need to do. So that is all about what? Backtesting. Now let's have more insight so that you don't get confused. Now, what is the purpose of this? It is to what? Evaluate the performance of a predefined trading strategy using historical data. We have said this already, right? So the strategy is already in place. You are not developing the strategy here, right? This strategy, you have already developed it in the video that I talked about. You're writing your entry exit entry rules, your exit rules, the things that you need to change, how you did things wrongly, and then the things that you need to what correct. All this are done. Define the market that you want to trade, right? The strategy, trading strategy. Either you are going to trade breakouts or consolidating markets. You understand? Everything is done in that video that I'm talking about. So now let's look at the stage, right? The strategy is already in place. Like we said, you have defined your trading rules, conditions, and criteria. 4, let's say, 3.3. Process. Apply the strategy to historical market data to see how it would have performed. Analyze the results and make any necessary adjustment. The same thing. Now, let's look at the outcome. Provide insight into the historical performance of the strategy, highlighting potential strengths and weaknesses. So backtesting helps you know the strength and weakness of a particular strategy, right? Good. And let me remind you or inform you that one trader can have different trading strategies. It's based on the currency or the instrument or the asset that you are trading, right? But for the typical way of trading, every individual or trader should have at least a trading strategy, right? And then you do the amendment for other market that you want to trade. That is it. And that can be done or can be used on any of the market that you do, right? It's just a matter of small amendment here and there. That is it. Now let's look at the importance of testing, right? One may ask, what is the essence of having your strategy back tested? Because if there's no reason or no importance of doing that, then why should we even do it? Because I said earlier that a lot are trading without what? A strategy. And then a lot are even trading a strategy without having that strategy being what? Tested. Right? And I told you, if you don't trade, if you don't back test, then you have no direction. Right? So let's look at the importance. Now, historical insights, right? Provides insight into how a strategy would have performed historically, right? Because every technical analyst, what they need importantly is what? Historical data. You can't enter into a market to do analysis without any data, because whatever analysis that we do is based on what? The past data to what? To have a foresight or have a perspective or even assumption or a bias into the future. So you see, it's very important. No trader will just jump into a trade or position without having analysis. You understand? So that is it. Now, it helps you what? Manage your risk, identifies what? Potential risks, and helps refine the strategy to mitigate them. So if there are some discrepancies, some errors, mistakes, right? As we trade, they are bound to happen. But you should be what? Vigilant, right? You should be smart to spot these things out and then rectify them. That is it. Now, 3 is efficiency. Allows for quick evaluation of strategies without risking actual capital, right? So you are backtesting, meaning you are not trading real money, real assets. So when it happens this way, if there's error or any errors one way or the other, you have the right, you have the liberty to what? Make amendment or make some changes. So that is it. It's at the, you know the importance. That is it. Now let's look at some disadvantages. One may ask, do we still have disadvantages? Oh yes, we have disadvantages. And then one is what? Data quality. Results are only as good as the data used, right? If you don't have historical data, like I said, you can't what? Trade. You can, in fact, backtest. So that is it. You should have data, and then you should be able to what? Backtest and have the results that you need. Good. Now, 2 is what? Overfitting. There's a risk of optimizing the strategy to fit historical data perfectly, which may not perform well in real time, right? Many a time, because you see, sometimes, in fact, many a time, traders trading demo or backtesting are not honest enough, right? When you are backtesting, you enter what positions, right? You check how it would have performed. There are many times or many a time that people, a trader will enter into this trade, and then when they realize it's not going well, they try making amendments, adjusting while the trade is running. Bear in mind, backtesting, allow the trade to run. Allow it to run. Don't be what? Adjusting. Many a time, you concede a loss just with what? A pip. And then you see them manipulating, dragging the what? The SL up or down. That is bad. Because in the real-time environment, you won't have access to do this. So be real with yourself. Don't be over massaging, or in fact, don't be massaging. Do that after a win or a loss. So that is it. That is why you have them. You have the rules, exit rules, and then the entry rules written out. So once you have written them, it's like what? You have emboss them or embroidering them. You can't what? Undo them until you have a result. So that is it. Don't be what? Changing it while the trade is running. I know people do that. And with this kind of practice, we escalate them or we take them into what? Real-time what? Trading. That is where people will put SL. That's where they intend losing an amount of what? Money. Then when trade or position runs against them, you see them dragging their SL, dragging their TP. So that is the problem. So be honest and be real with yourself. Even in the what? Backtesting. I do that. People who follow me or my mentees know that I do what? Backtesting and forward testing before I even come out to give signal on particular what? Currency or pairs. That is it. Now, 3, assumptions. Assumes that past market conditions will be similar to future conditions, which may not always be true. Like, so I told you that trading strategies are bound or are prone to what? Changes, right? With time, you realize the market conditions are changing. We have something called algorithm, market algorithm. They change over years, right? Sometimes every year, sometimes a number of years, they change. So when they change, it's a matter of you looking at your what? Your strategy, and then be making changes. I know a lot are tempted or will be tempted to be jumping from one trading strategy to another. They do that. They follow one mentor for some few months, then they jump to another mentor, thinking that maybe the mentor maybe had a losing streak for a week or a month. So they think that that trader or that mentor is no good. I'm telling you, no trading strategy is 100% accurate. We have been saying this, or I have been saying this. No strategy is 100% accurate. You, one way or the other, conceive some losses. It is part of the game. But we are just using the ability of managing our risk. That is important thing in this market. Everyone can make money in this market, but not everyone can manage. That is the problem. So the fact that your mentor lost in a row for a month or a week doesn't mean the strategy is weak or the mentor is not a good trader. No, bear in mind. So with that being said, let's move to forward testing. Now, forward testing is a subset, like we said, is found or dependent on back testing, right? So now let's look at it. Now, forward testing, also known as paper trading or walk forward trading, involve what? Testing a trading strategy in real-time market conditions without using actual money. So here, the simple way to grasp this is what? Doing what? Demo trading. Demo trading. Another term is what? Paper trading, or better still, walk forward trading. Right? So whatever strategy that you developed, right, that you have tested in the back testing, now you are going to put them to what? Practice, actual practice. Bear in mind, the other one was just a matter of what? You enter on the chart, and then the tool that are using what? In fact, most of the tools that are using the analysis, back testing, or for testing is what? Trading View. That is it. If you have other platform, then that's cool. But Trading View is so far the best what? Testing field for me, right? So on the back testing, it's just a matter of doing that. You enter here, right? So in fact, back testing is done manually, right? It's done manually in the sense that you enter the trade, you push the screen to maybe forward, push it forward, and then enter behind. You enter a trade behind, right? The past data, and then you move ahead after putting your SL, your TP, your entry. Then you move ahead, you drag ahead, right? To see the level of the SL and TP if you would have what? Had profit or loss. So basically, that's back testing, right? So it is done manually. So within some few minutes, you can do back testing. Yes, I'm throwing more light on that. You can, few minutes, few months, you can actually do intensive back testing because you are in control doing that. So being in control, that's where sometimes you try to manipulate things. That is the problem. So I think you draw the line. But in forward testing, you're actually what? Trading demo. So demo, you enter into a trade, you allow it to run either SL or TP. Bear in mind, even in the forward testing, you can still do some manipulation there, right? People do it. So that is a matter of being honest, genuine with yourself, right? So this is basically done on demo. You are trading a demo using what? A strategy, right? So that is it. Now let's look at the development process, right? Now, one is what? Strategy, what? Ideation. Some will say ideation. It's actually ideation. So strategy ideation. So strategy ideation is look at it now. Develop a trading idea or hypothesis. This is where you create the initial strategy rules and criteria. It's part of it. Bear in mind, it doesn't change the fact that the strategy would have been in what? In existence already. It's just an idea. I'm giving you an idea of that. Now we come to what? Back testing of that strategy that you have. So you see that even for testing, you have to do what? Back testing. Right? Before you can do for testing, then you might have already done, or you must have already done your back testing. So that is what I meant by for testing being a subset of what back testing. Now, back testing two, test the strategy on historical data to evaluate its potential effectiveness. We have looked at that. That is how we move forward. Now, three, refinement. Refine the strategy based on back testing outcomes to improve performance. Four, the actual thing for testing. Validate the refined strategy in a real-time simulated environment. to ensure its performance well under current market conditions, right? So you have done the back testing where you were in control, moving screens here and there, setting your SLTP and that, right? And then within a few seconds, you just drag and then see the results. After that, you see that the strategy was very good. It performed well. Don't rush into trading it. So you see what is actually involved in trading. So when someone comes into the market and then within a few months, they want to be profitable, they want to start buying, living a luxury life. No. If you have the spirit of gambling, please stay back. Find another job and do it. Maybe a gambling job and do. It's actually a profession. I call this a profession. It's rather unfortunate this how to make money or financial literacy is not taught at the university. The only thing that is done is what business management, right? I don't know. So you see what is happening. Where did you get to? Okay, let's move to 5. Implementation. If forward testing is successful, right now, we have done back testing, done forward testing. So we are saying that if forward testing is successful, deploy the strategy with real capital, continuously monitoring and adjusting as needed. So one thing I'm going to repeat, it means that a strategy is not going to be fixed, right? You have to continue monitoring, changing, adjusting, because market conditions are meant to be changing over time. But it doesn't mean you are going to draw from scratch a new set of a strategy. No. Unless you are entering into another market or another currency of that sort. That's when you can draw a new strategy of that sort. But then, even trading one particular financial market, let's say Forex, if you do that, you are okay, you are good to go. It's just a matter of small tweaking. That's it. But if you are entering into another field, then maybe you can draw another strategy. Yeah, I don't even worry myself. I have the same strategy, and then I just and then just a matter of tweaking, and then I'm good to go, and it works for me. So that is what we mean. Now, let's have some insight. Right now, we were being more technical there. Let's have some insight. What is actually what the characteristics actually of what for testing. So we talked about paper trading accounts. So use a simulated trading account to execute trades based on strategy. So we are using demo account to do that. Right? That is it. Now, 2, the stage. The strategy is still in place from the backtesting phase. We are repeating that. From the backtesting phase, potentially refined based on backtesting results. So once again, you should have the strategy in place, and that strategy is already backtested, has already been backtested, right? So that is it. Now, in real-time market, so after backtesting, you do what? Your forward testing actually. So apply the strategy on real-time market data. That's demo trading. Execution, the same idea there. Now you have to review, performance review, continuously monitor and analyze the performance of the strategy in real time, right? In fact, this is, you have said it already. It's just a matter of reading. Now, 6, adjustment. Make necessary adjustments based on real-time performance and continue testing. Now, 7, performance. Now, to validate the performance of a trading strategy in real-time market conditions without using actual money provides a realistic assessment of how the strategy performs in current market conditions, allowing you to fine-tune it before committing capital, right? Good. So here, basically, just talking about the importance of it, having a glimpse, a foreknowledge of the importance of for testing, right? Now, process. Implement a strategy in a simulated real-time environment, such as paper trading account. Observe how it performs with real live market data and make any final adjustments. So that is it. Let's look at some advantages and disadvantages, like in the back testing. Now, realistic conditions, right? The advantage. Test the strategy under actual market conditions. Yes. Behavioral insights helps understand the psychological impact of the strategy in real time. Validation provides additional validation for the strategy before risking actual capital. Disadvantages. Time consuming, right? Requires a significant amount of time to gather meaningful results. No historical perspective. That's disadvantages. So let's look at that. Time is very time consuming. It's true. Because you have to wait for the trade to run. If it's a string, it's a swing trade, you have to wait. If a position trading, you have to wait. So you understand. That is why it's time consuming. But in the backtesting, you are actually in control of whatever is happening, the time, and then when. That is it. And then the last but not least, is resource intensive. Requires continuous monitoring and can be resource intensive, right? More time. You need more time to do this. Now let's combine these two. For a comprehensive evaluation of a trading strategy, it's crucial to combine both backtesting and forward testing. So it means that you can't do one and forgo the other. And that is where a lot of the traders do. I'm repeating, most of us do not even know about backtesting, not to talk of forward testing. Some also know only of backtesting and not forward testing. So you see the problem. And then we are getting the idea, the knowledge here that one is dependent on the other. In fact, we need a two. So one, backtest first. You do your backtesting first. And then start by backtesting the strategy on historical data to identify potential strengths and weaknesses. Refine. You know that. And then let's move to three, forward test. Implement the refined strategy in a simulated real-time environment to see how it performs under current market conditions, right? So backtesting, final adjustment, make any final adjustment based on forward testing results before deploying the strategy with real capital. Backtesting ensures the strategy has merits based on historical performance, right? So make sure your backtesting is correct. At least it's run like 80% to 90% before you move on to forward testing. It's actually a big process that you have to go through. It doesn't create the strategy, but evaluates it. So we are saying that backtesting or forward testing doesn't create the strategy. So if you are watching only this video, you are not going to be able to create a strategy here, unless you watch the video on how to create a simple trading strategy. Then you can do your backtesting and forward testing. You understand? So that is it. Now, let me give you some takeaway. At least if you are not able to remember anything, at least these points should be at the back of your mind or your head. Now, backtesting and forward testing are essential tools for developing and validating trading strategies, right? Developing and validating. Backtesting provides insights based on historical data, while forward testing offers a real-time evaluation of the strategy. So a real-time evaluation of the strategy. Now, by combining both methods, traders can enhance the reliability, and performance of their strategies, ultimately increasing their chances of success in the market. Right? Now, backtesting evaluates the historical viability of a strategy that is already in place. We keep hitting the same thing, while forward testing validates and fine-tunes this strategy in real-time conditions. Neither process is primarily about creating the strategy, right? Rather, they are about evaluating and refining an existing strategy to ensure it is robust and effective, right? So that is it. Now you can watch this video again, download better still, and then you can have proper understanding of this. Now, we learn by practice. So this video, you can learn actually, but if you don't practice, if you don't write things down, type things out, you won't be able to do anything. Have a trading strategy, and then move back and then backtest them. If you need any assistance, further assistance, join in my Telegram channel, right? The link will be in this video description. hit me up and I'm here to help you, either a VIP or a free service. I'm here. Thank you very much. And then stay safe, stay blessed. Watch on this video channel for other interesting what? Goodies. We will say bye for now.